code. Okay, there we go. So as you can see, lower low. Someone is eating. Wow. Okay. Yeah. So as you can see, lower low, lower high. All these lower highs are in premium. Break market structure. Lower low, lower high. Also in premium. Break market structure. Lower low, lower high. In premium. Break market structure. Lower low, lower high. In premium. Break market structure. And this time, price did not come back to premium. So take note that sometimes price does not come back to premium. Sometimes price does not come back to premium. Sometimes price does not come back to discount. So you can get something like this: higher high, higher low in discount, higher high, higher low in premium. So they don't want to come back down here. That sometimes price will do this. Then they will break market structure and make a new high, new low, higher low, higher high. Then they will make a higher low in premium again. So they're not going to make it easy for us, because if it's easy, everyone will be rich. So sometimes they have to change it a bit. Right. So did this answer your question?
So it is like if price doesn't reach equilibrium, we shouldn't touch the price, right?
No, there are some times you can still sell, but okay, that will be in the future lesson. Once I have taught you the other things that you should look for. Sometimes, okay. Yeah, sometimes you can take it, but it has to confluence with other stuff that I'm going to teach you.
In future lessons?
Yeah, in future lessons.
Okay, thank you.
So one question I had. So for the higher high and the lower low, is it important the color of the candles? It must be on the picture that you show us. There are two red candles and then a green candle, or two green candles and a red candle. Is this important? The color, the
oh no, it's not. It's not important.
Okay.
Yeah. The most important part is the three candle pattern. As long as there are three like this, that's the most important part.
Okay.
So here I have an uptrend, right? We have a new higher high, right? Where's the last higher low? The last higher low is this one, right? 1, 2, 3 here. 1, 2, 3 here. So this is our high. This is our higher low. Our equilibrium is this. So as you can see, this is our discount. This is discount. So price comes back, make higher low in discount. Price goes up. This here is not a BMS. So I don't want you to mark this as a BMS. Please don't mark this as a BMS. If they're not breaking the highs, it means this is our higher high. This is still our higher high. Nothing has changed. If price is failing to break the highs and lows, it means they're going to range. That's what it means. So this is not a BMS. This was now the BMS right here. This one. That was the clear BMS right here. That's the BMS. So once you have this BMS, now you have a new range. Our new range is this low and this new high. This is the equilibrium, yeah, somewhere here. As you can see, this is your discount. So price comes back to make a higher low in discount. This is our swing low, 1, 2, 3. Price goes up, breaks market structure here, and we have a new higher high. Once we have a new higher high, you mark the new range. Always mark the new range. Always mark the range with your trend lines. Why do I say that? Because of this. It will make it easy for you to see a clear BMS and one which is not a BMS. So this is your higher low. This is a new higher high. This is your equilibrium. So this is your discount. So as you can see, price. Now, this is what sometimes what price does. When price makes a new high, they don't come back down straight up. They'll start to range in premium. So this year, don't be confused by this. Do not be confused by this. They do this. Higher high, higher low, higher high, then they do this. Then higher low, then break market structure. They do this sometimes. So this is your high, this is your low. Don't be confused by this here. Sometimes they do this, something like this. Higher high, higher low, higher high. Then when they make a higher low, they do this, something like this. Then break market structure. So don't be confused by also this. Don't be confused. So again, higher low in discount, then break market structure, new high, low, equilibrium. So we expect a higher low. That's the uptrend. But that lady who asked me the question, did I answer your question?
Yes, you did. Thank you.
So that's the uptrend, right? All right. So uptrend, downtrend. Okay. This is the range. Yeah, this is the range here. We have this range. So we have two types of range. Yeah, we have two types of range. Number one, we have I guess call it an unclear range, unclear. And then number two, a clear range. What do I mean by this? So we have a range like this: higher high, higher low, higher, right? Then this is your high, this is your low. Price just comes down straight to discount, premium, discount, premium, discount, premium, discount, premium, discount. This one is unclear. It's this one. Nothing is clear here. It just goes straight up and down. Then we have a clear range. What's a clear range? That's this one. This is your high, low. But then they'll start to do this lower, low, lower, high, lower, low, lower, high. When they go to deep discount, higher, high, higher, low, they give you this. So as you can see, this one is clear. We have a minor market structure inside. Minor market structure. That's what we have here. So you can mark this as your major structure and this as your minor structure. This one. That's the minor structures, all of this. So this one is clear. So here we have a clear range. This one, this is your high, this is your low. This is the clear range, lower, low, lower, high. So you see the minor structure, lower, low, lower, high. All these are minor structures. They are very clear, so clear here. And this is why I say you should use the trend lines. This is why I say use the trend lines. This is your lower high. This is your lower low. Right, do you see this? Do you guys see all this? This one. This is not a BMS. No BMS. No BMS above. No BMS low. No BMS above. So what does this mean? This is a ranging market. And this is our major high, lower high, and major low. As long as they don't break this high and this low, we are in a ranging market. We are in a ranging market. Do not be confused by this. Who's that? So as long as price is not breaking this low and this high, we are still in a range. That's a range. Until they break it here, that was the BMS. That's the BMS. So this is a clear range. This one is not clear. Okay, as you can see, goes up. Okay, so as you can, okay, just like I was saying, use the trend lines. This is your higher low. This is your higher high. Okay, so this is a range again. Price is failing to break this high and break this low. So these are our major higher low and a higher high. So as you can see, no BMS, no BMS, no BMS, no BMS, no BMS. Even here, no BMS. So we are in a range. The BMS was right here. This was now the clear BMS. So this is a range, and clear range. Next part, another range. This one was a bit messy though. It was a bit messy, but still it's a range. Another range here, another unclear range. Comes down, goes up, comes down, goes up, comes down, goes up. Not clear also. Another one here. This one they were ranging a lot. They come down, they go up, they come here in range, they come down to discount, they range a bit, go to deep premium, come back to deep discount, range again, go back up, come back, range again. Yeah. Okay, that's the, okay, this is the one, this is the annotation I was giving you. Higher highs, higher low, high, low, high, low. A higher high, this one I told you about this, higher high, price comes down to discount, we have a range. Then they break market structure here. Number three, higher high, higher low, higher high, then they range in premium, but they don't break this high, this one here, our major high. Then higher low, then they go up. Same thing here, higher high, then they have a range. Sometimes we have a range here. Okay, higher high and the higher low, then they break structure. Another one is this one. Okay, this one is a bit complex to some students, but when you see price goes up and then they range, then they make a new high. This is the high. It's rare to see this one. You don't see it often, this one, but it should be a higher high, higher low, then price goes up, we have a range, then swing high. And then this one again, higher high, range in premium, higher low, then they break structure. So in a range, now take note about this, only in a range, if you see this higher high, no, just to, yeah, this one, higher high, this is your range. So this one, I noticed this from trading. So if this is your range, if this is your range here, price is ranging, right? And then they break market structure here. When they break structure here, this was our higher high, our higher low, our higher high. So when you see this BMS after a range, this is now your key higher low. The low that led to the break in market structure, that becomes our higher low. That's what happened here. That's why they highlighted this one here. This is the low that broke this structure. So that becomes our higher low after a range. So this can be our small, this was a small range here, a small range. Only after a range, lower low, lower high, then you mark the range. This is the high. This is the lower high. This is the lower low. And then price starts to range inside here, right? Then they break structure right here. So this is the last lower high to break this low here. This becomes our lower high. That becomes our lower high. So you expect a lower high here in premium of this high and this low, then they drop. So even here, this higher low and this higher high, you are going to expect higher low in premium here, then they go up. That's the, yeah, that is all about that. So that's the uptrend, downtrend, ranging, premium, discount. Any questions so far? Okay.
Hello.
Yeah.
I want to know, is it possible that the fake out can happen and it still come back to discount before going to still going uptrend?
A fake out.
Yeah, maybe fake out to happen and it to come down to discount before going still go uptrend.
Usually a fake out is the one we find in a ranging market, right? In a ranging market, that's the way we find a fake out. We see this, like I explained. Then a BMS, then you expect a higher low, right? We want a higher low, a higher high, but we don't get that. Oh, I'm using this one. I'm using the wrong pen. Okay, it's okay. So we have a range. So when you see a BMS, but then price comes back to discount, but then they fail to break this old high here. This is what and they start to range again. This is the fake out. That's the fake breakout. Only if they break structure and they come back and continue the old range, that's a fake out. But if you get a BMS here and price comes down to discount, but then they break this high, that's an uptrend. This was not a fake out. This was not a fake out. It was a higher high.
Okay.
Yeah. Right. So that's yeah. I think.
Excuse me.
Yeah.
In a BMS, we need the body of the candle to break the wick.
Correct.
Body of the candle, not the wick.
The body of the candle has to close above the old high and old low.
Which is the old high? We consider it as a wick or the body of the candle?
We use the wicks, like here. This one here, we use the wick. This is the BMS.
which is not clear to me. That's why a doubt is arising.
Okay, yeah, I know some people use the body, but I don't use the body. Bodies sometimes sometimes they're wrong. I've tried to use bodies, but then they were just wrong. They just messed up my structure. So I use the wicks. The wicks will never disappoint you. So this is the BMS. This is not a BMS when you see this wick here. So these are still our high and our low.
Okay.
If you see a BMS on 1 hour, so like I said, right? I said you 4 hour and 1 hour. That's the one we use for higher low, higher low, higher low, or lower high, lower high, lower high. But on some rare occasions, this will be 4 hour, but 1 hour will be like this, maybe something like this. So if you see that 1 hour is now different for 4 hour, stick to 4 hour. If 1 hour and 4 hour have different structures, stick to 4 hour structure. Stick to 4 hour structure. And sometimes if you see a BMS on 4 hour, on 1 hour, check 4 hour also. Is it a BMS or not? Confirm with 4 hour also. But sometimes, okay, it's not always, but sometimes, maybe 20-30%. 1 hour will give you a BMS, but 4 hour is not a BMS, it's a wick. I think it's about 20%, yeah. About 20, yeah. You don't see it often though. You don't see it often.
Okay.
Right. The next part we are going to go to now, we're going to go to reversals now. Reversal. Right. So if your daily is bullish, right, to make a higher high, and now they're coming to make a higher low, we are now looking for this here. What happens here? On the 4 hour and 1 hour, what happens here? So we have two types of reversals. We have type 1 and type we have type 1 and type 2. So like I said, if this is a daily trend, it's the D1. If you go here on the lower time frame, on the 4 and 1 hour, you're going to see higher high, higher low, higher high, higher low. So you're going to see this. You're going to see all of this here, right here. Okay. So now we are what happens on this reversal here? When daily goes from uptrend to downtrend, what happens? So this is what you're going to see. So we have a higher high, higher low, higher high, higher low, higher high, break structure. This is what we call type 1. So type 1 is 2 BMS. Break market structure to go high and break market structure to go low. So we have 2 BMS. BMS to make a higher high and BMS again to make a lower low. So we were expecting a higher low here, then price goes up, but there was no higher low. There was a break structure. So in an uptrend, as you can see, they were breaking the highs, break the high, break high, break high, break high, but then now they broke the low. So this is our type 1 reversal. This becomes the lower low, lower high, lower low, and that's the downtrend. That's our type 1. Type 2, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. No new high. There is no new high. There is no new high here. And then they break structure. So we only have one BMS. This one. We only have one BMS on type 2, right there. Okay, so if I use a different color, type 1 is like this. Type 2 is like this. Do you see the difference? Yeah, this is our, okay. So this is our type 1 reversal, and this is our type 2 reversal. Okay, so that is what you're going to see here. This is what you're going to see here when daily changes direction. Either you see type 1 or you see type 2. So this is our lower low, lower high, lower low, lower high. Right. So let's say now the daily comes down to make a higher low. Daily makes a higher low. Then there is now going back up to break structure. So what are you going to see here? Right here. What are you going to see here? So you're going to see this. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, BMS. So again, 2 BMS. 1, 2. BMS and BMS. And we get a higher low, higher high. Yeah. So as you can see, lower low, lower high, BMS, lower low, BMS. On type 2, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. There's no low. There's no new low down here. Then they break structure right here. That's our BMS. BMS 8. BMS. So that's the then higher high, higher low. So if I draw like this one is like this. This one is like this. That's the difference. This is the difference with type 1 and type 2. Type 1 and type 2. Right. So also at the reversals, we have type 1.1 and 1.2. Now, what's the difference? This only applies to type 1. Type 2 has no 1.1, 1.2. Only applies to type 1. So what is type 1.1? 1.1 is this one here, with a clear BMS and a BMS down. That's type 1.1. 1.2 is going to be like this, right? Right. So this one here is not a BMS, not a BMS, but this will be a wick. This will be the wick of the candle. It's going to be a wick. This one here, that's the wick. So price will go above the old high, but they need to close below. So it's just a wick. That's 1.2. 1.2. So now let me go to the chart and show you the reversals. Right. So we have this one here. Right. So lower low, lower high. Break structure here. Lower low. This is a lower high. Why? Why is it a lower high? Because there was no BMS. Price did not break above, close above. So it's not a lower, it's not a BMS. So it's a lower high. Price comes down, break structure. We have a new lower low. Price goes up, makes a lower high in premium. Then comes down, there's no new low. And then they break structure here. So these are type 2. Type 2, like this. Type 2. Low, high, low, BMS. That's a type 2 reversal. This one here. Let me go to this one. Lower low, lower high. Lower low, lower high. This is not a BMS. This is not a BMS. So we are still on this low and this high. And then, so now what is this? What is this? What is this?
Range market.
It's a range. So we have a ranging market. Before the BMS, we had a range. So just like I said, if there was a range before the BMS, when price broke structure here, this is now our key lower high, this one. Because this is the lower high, broke structure. So this becomes our lower high and our new lower low. Then they broke structure here. So this is a type 1, type 1.1. Okay, type 1.1. BMS, BMS, 2 BMSs. Wait, let me see. It's easier when you use a trend line. Yeah, oh yeah, this was the BMS, yeah. BMS, BMS, 2 BMS, type 1.1. This one, let's see, always use the trend line. It will make it easy. This one, type 1.1, 1.1, higher high, higher low, BMS, BMS, 1.1, sorry, like this, yeah, this one, 1.1, this one, lower low, lower high. Let's use our trend line. This is a type. So here, now depending on the type of trader that you are, some people will use this high and some will use this high, but both of them will BMS, both of them. So this is a type 1.2, 1.2 with a wick, with this wick here. It's a wick, not a BMS, it's a wick. That's 1.2, type 1.2. This is why I always say use trend line. It will make your life easy. This is a new high. This is our new low. This is our new high, right? But now you can see what was happening here. There was a range. We are now having a range. Price was failing to break the high, also failed to break the lows. And then they finally broke the high here, okay? So aggressive traders will use this low. Some traders will use this one here. Okay, but still, both of them were broken. So this was a BMS, then a BMS, type 1.1. BMS, BMS. And this is our new range, high, low, equilibrium, premium. So lower low, lower high in premium. Another one here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, BMS, type 1, 1.1. Another type, what is this one? This one is type what? Okay, I'm not gonna say it. What is this one? Type what? Type 1.1, 1.2, or type 2? Here.
Type.
Okay, wait. I'll make it easy for you guys. There we go. Yeah. So what is this?
1.2.
Yeah, 1.2. Why? Because it's a wick.
1.2.
Because of the wick. That's 1.2. Then we have this one here. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Let's see. It was a BMS. Lower low, lower high. No new low. Break structure here. Type 2. Type 2 here. So you're going to see this on 1 hour or 4 hour. What does this mean? This means that the daily is changing direction from a downtrend to an uptrend. That's what it means. Another type, what is this one? Type
1.1.
Okay, good. Type 1.1.
Type 1.1.
1.1 because of this BMS here. There was a BMS and then there was a BMS. It was type 1.1. This one, I'm going to show it later on. Type 1.1. Oh my God. Higher high, higher low, higher high, higher low, higher high, BMS. Type 1.1 again. Type 1s are a lot. There are a lot, but I'll explain why later on. Another lower low, lower high, BMS, BMS. Type 1 again. Higher high, higher low, BMS, higher high. Wait. Now you see this one here. There was a high, there was a low, there was no high, then there was a BMS. So now if you see this was a type 2 here. This is why I say sometimes you need to check your 4 hour. If you go to 4 hour right now, this was going to be a high, a low, a high, a low. So this is why sometimes you need to check 1 hour. Check, 4 hour. Sometimes you need to check 4 hour, especially on the reversals. Check 4 hour also. Type 1.2, I think this one is, as you can see, with the wick. This is the wick. And yeah, that's all for this, the reversal. Okay, so that's the reversals. That's the reversals. Now let's go to the charts. Let's go to the chart. So I'm gonna show you a downtrend, then a range, then an uptrend. Right, I'll use this one here. So here, I'm gonna use this. Wait, what's going on? This one here. This, okay, this downtrend here. That's one I'm gonna use. All right. So first of all, we had this small uptrend here, right? This was a higher high, right? This one, and this was the higher low. Higher high, higher low. No new high, no new low. There was not a BMS here. No BMS, no BMS. So our range is still this high and this low because we don't see any BMS. So higher high, higher low. Then they broke structure here and made a new high. Then they came down and then they broke this one again and made a new low. So it was a type 1 reversal on daily. So once we have this breaking structure here, this one, this BMS. So what does this mean? This means we are now bearish. On the daily, we are bearish. So we are going to be selling. So now for swing traders, for swing traders, they can sell in premium of daily range. So let's mark our daily range. Our daily range is this high and this low here. This is a BMS. Don't confuse this line here. This line is a BMS. This one here. That's our BMS. Don't be confused. So our range is this high and this low. Now take your Fibonacci. This is the Fibonacci here. This one. You can see with the lines. Take this high and take this low. And this is the equilibrium. This one, 50%. Then you highlight. This is your premium. That's your premium. That is where you're going to expect a lower high. You're going to expect a lower high here, right here. Right, so let's go to 4 hour one. So here, this is where you're going to expect your lower high.
The network is crumbling, sir.
Pardon?
We can't hear you properly.
Okay. Guys, can you hear me?
Yes, all good.
Yes, yes, I can.
Yes, we can.
Okay. So I think maybe it's your connection that side. So as I was saying, this is your high, this is your low. You take your Fibonacci from this high to this low. This is your premium, this one. That's where you're going to expect your lower high, right? So there are some traders who are different. They are aggressive traders and conservative traders. The conservative traders or the safe traders, they wait for a swing high. They wait for this 1, 2, 3. As they wait for this to happen. Once this happens, then they start selling from the 4th day and the 5th day. But for aggressive traders, they are going to look for the reversal here on the 1 hour and 4 hour. So let's see, price goes to premium. Once here, we are in premium, right? 4 hour, 1 hour. Let's see. So as you can see, higher high, higher low, higher high. This is our new high. We mark with the trend line. And this is our low, right? Failed to make a high, failed to break the low. So we have a range. We have a ranging market here. Price is failing to break this high and break this low. And this was now the BMS. So which was the major swing low that broke this high? It was this one. This was the major swing low, the major one that led to that breaking structure. So when they broke structure here, this was our new high here. And this was our old higher low. So price came down, price did not break structure. So we are still bullish. And then they broke structure here, right into premium. Then there was a new high. So just like I told you sometimes they don't come back to discount. They don't come back. So there was a new high and there was a new higher low in premium, 1, 2, 3. and they broke structure again here. So this is our higher low. Right? Higher high, higher low, higher high. No, come on, what I meant. This one here, yeah. Higher high, higher low, break structure here. This is the BMS. This is the candle that broke structure. Okay, so I think I need to explain this. Sometimes students make a mistake like this. So let's say they were trading, right? They saw this new high. They saw this new high, right? Then they do a trend line. Then price comes down to make a higher low. They need break structure. And this is our BMS right here. That's the BMS. So sometimes they make a mistake that when price comes back down here, right here, they say BMS again. This is wrong. It's not a BMS. The only BMS we want is this one. So what you should do is when you see this BMS, take your trend line, bring it back right here. Right here. Bring it back here. Right. So it will make things easier. Higher high, higher low. Higher high, higher low. Why is this a higher low? There was no BMS. And then there was a failure to make a new high. And then they broke the low. Type 2. Type 2. This one. And once they broke this low, this is the major high. This is the major low. That broke structure. And price comes down and makes a new swing low. And just like I was showing you on those examples, sometimes price wants to play around in discount. Lower low, lower high, lower low, then they play around here, then lower high, lower low. That's what happened here. Lower low, then play around in discount, then lower high. And the lower high was in premium of this high and this low. If we take the Fibonacci from this high and this low, as you can see, we are in premium. That's premium. That was the lower high. So our structure was this high and this low. Okay. So we could have thought, we would have thought here in premium. Then we now have this was a minor structure. Please don't say this is a lower low. This one. Okay. Why? Because we are still inside this high and this low. We have not broken this high and this low. Okay. So this is what we call a minor structure. Our major structure is this. This is a minor structure here. Minor structure. And this was now the BMS for the major structure. So this was this is minor structure. And then break structure, lower low, lower high in premium. Break structure, lower low, lower high in premium. BMS, lower low, lower high. BMS, lower low, lower high. And now we are bullish. So like I was saying, aggressive traders want to catch this. Safe traders wait for the 1, 2, 3, and they start selling here. On the 4th or 5th, they start to sell here. On the safe traders, they want to sell here. They wait for the swing high to form first. That was this. So if you want to swing, you can sell here. And your TP is this BMS. So when price came down and broke structure, then you can close your trade. So once they break structure, which is the last lower high to break structure, it was this one. This one here. And this is our new lower low. So this is our new range. Our new range is this. Fibonacci, high, low,